Good evening, everybody. Welcome to the July 14th edition of the Locke in Your Success Trade and Market Updates. Make sure you visit our trading blog to find out about our great coaching and mentoring programs, as well as getting the weekly market updates geared specifically toward income traders. And you can track and follow the examples of my trades and find out when and why adjustments are made. And remember to join our mailing list. We came up with the M3 video series this week on the SMB Options Tribe. I've got an excellent response. Already have a bunch of people who have commented and told me how well they think the program was put together and how very educational it was. So make sure you check that out, as well as our very popular Bearish Butterfly video series. I'll be posting some links underneath here so that you can get more information on these or find out how to purchase them. Just one note, the M3 is under special introductory pricing, which ends August 1st. Also, we extended the introductory pricing for the Bearish Butterfly that we came out last year until this August 1st also, so the price on both programs are going up August 1st. If you're interested in them, then now's a great time to go ahead and go for that. As far as if you're interested in both of them, I know SMB has put together a few package deals. So, check that out if you're interested. And, stay tuned for our other great programs that are going to be coming out. So, if you haven't joined the Options Tribe, www.optionstribe.com. Take a look at that, and at the very least, you can follow their blog and so forth. And if you want to join the Options Tribe, a wealth of information there too. Okay, let's take a look at the markets for a minute. Talking last week, market was up in here somewhere. I talked about how I was short-term bearish, longer-term bullish, and we were expecting the markets to come down probably into this trend line and then to bounce. And that's pretty much exactly what we got here. If we take a look at the SPX, we exceeded our trend line more or less on an intraday basis, but managed to close above it for the most part. Either way, we kind of turned right about where we thought. And again, we got a nice strong bounce off of that. And the Dow, same story, a little deeper penetration than we thought. Actually came back down to a more conservative line here. If let's get rid of this trend line because that's not valid anymore. Come down to a more horizontal support level. Gave us a nice little bounce, and the Nasdaq, same basic thing. We came down, close to our trend line here and prior lows, and we had our bounce. So this movement was expected. The question is, where does the market go from here? Strictly from a straight chart pattern point of view, as we said earlier, the charts are still bullish longer term. We have our longer term trends, if you go to the 5-year, that are still in place. So those are still perfectly valid there. And on the Dow, same thing. Longer term uptrend is right there. Nasdaq, and finally the Russell is, which has been relatively strong compared to everybody else. Its longer term trend is still intact, but it's a little bit higher off its trend line. As this is more or less been the leader here. So now, where are the markets going from here? Charts are bullish. So if I was a pure chartist, then I would expect them to be rising. However, I have some other opinions on my own, and I have a lot of friends in the financial services business and mutual fund or managers and so forth. And I've been talking to them, and I ask their clients. I say, hey, what are your clients doing? What are they? Are they just kind of sitting on the sidelines waiting to buy? Are they funneling into the market consistently? Are they selling? What's going on? And basically, what they told me is that it's completely news driven. When there's good news and the market's gone up, and they get the phone call, and everybody wants to pile into the market. As soon as some sort of bad news comes in and a bad day comes, you get the phone call, they all want to get out of the market. And that was pretty consistently across the board of the people I talked to. So what that's telling me is the future move here is going to be more or less 90% news driven. and maybe even a little bit less technical driven. So that puts us kind of in the middle of nowhere's land, and it also, when you get that type of a thing, you get a very choppy market because people are pulling and pulling their money and sticking their money in, changing their mind every single day almost, and that's I think why we're getting these wide range of choppy movements. I think that at least contributes a bit to it. But in general, what I would expect here is a continued up move at least to this downtrend line here in the Russell. And from there, that's going to be the kind of the telltale sign. I may say it may even go as high as older lows, or maybe, as high as the previous highs here, or maybe even here if we have some really good news coming in. But from there, I would certainly expect a downturn. And my opinion that I said, I think a couple weeks ago, the charts are bullish. I still think this trend line's breaking. I just think it's taking longer than normal. And I do think this is going to put in a topping pattern and break to the downside and come to more major support down here within probably the next month or so. So from a pure chartist standpoint, we're going up. From when I take the general attitude of the investors and the prospect of how things look in Europe and so forth, unless we get some really good news, I think we're going to come up to this trend line and come down. And again, it's fairly rare I go against the charts. I usually am all about the charts. I don't think these patterns are going to hold. I think it's going to reverse. So the charts are bullish. I'm still I'm short-term bullish. Last week I was short-term bearish, longer-term bullish. This week I'm short-term bullish, longer-term bearish. Either way, our shorter-term moves have been being called pretty well. The longer-term move here, we'll see what happens. Okay, let's take a look at our positions. The first thing I'd like to do is take a look at our at the August M3 position that I put on. I had the absolute worst timing on entry with this, and I tried to hedge for it, and I under-hedged for it. So, as we were talking last week, short-term bearish, longer-term bullish. Last week, I figured the markets would come down into this range somewhere, take off into the other direction. Well, me running around all week, I was limited in time in when I could enter the market because I had plans during the day and sometimes coaching sessions, but a lot of family vacation type of stuff. And come Thursday, we got out of the July position on which we'll talk about in a minute. We got out of the July position on Wednesday. Come Thursday, I needed to get in the market if I was going to get in it, or I was going to have to probably wait till Monday. It was Thursday morning. I had about an hour window I could put the trade on. Just happened to be at the very low lows here. Knowing that, I did overhedge the position to the upside a little bit, but I did not hedge it enough. And we can kind of talk about that in a second here. And of course, we had the big bounce, and this is where now we'll talk about the position. So I put this on at the bottom of the market. I think it was down in here somewhere. I was about 28 points behind the market. At the time, the market is coming down. But, even though the market was coming down, volatility, or IV in the market, wasn't really rising. The price of a butterfly here was $12.50. It was a little bit more than that. I put in a lower price. I think for the time period that I filled it, I think I did pretty good on it. I hedged that off. My 5 butterflies here, I decided to do 5 this month. I hedged that off with 8 IWM calls. With the anticipation or expectation that should the market move up, the value is going to, because of the reversal in the market, even though volatility drops, I know the price is going to fall out of these butterflies a little quicker than it's telling me, and I'm going to go ahead in here and hedge it a little harder than normal to deal with the fact that the butterflies are going to probably lose more than I would think they would. And that's exactly what happened. The market reversed, took off to the upside here, and the position ended up being down about, well, we'll just say if I did nothing, the position would be down 476. Now, when I went in here, my T plus 0 line was pretty much absolutely flat, maybe slightly positive delta, yet I lost money. Again, that's due to the fact this whole T plus 0 line dropped out. If I back my data out to the day I entered, which was Thursday, and I entered here, right? I mean, if this T plus 0 line was accurate, that should say 0 or maybe a little bit, probably higher than 0 because volatility dropped. And it says minus 285. So the way I look at it is 285 of this loss is straight from the fact that the market reversed and the butterflies dropped in value more than normal. The rest of it's probably normal price movement drop, and it shouldn't. We really shouldn't be down this far. But hey, it's a bad entry. It's not a big deal. We're down less than $100 a contract, which is very, very small. Easily made up later in the trade. So no big deal there. I certainly could have picked a better entry, however. But that's that. So the market comes up into this range, and I'm looking at my position. Let's just go to live for a second. I am, my theta is getting down there. My veg is getting positive. I have to sit over the weekend. I know my theta is negative up here a little bit further. I know my veg is more positive up further. So I'm starting to get a little bit concerned of a drop in a T plus 0 line. So what I'm going to do is I'm going to come in here and I'm just going to adjust my position a little bit to take my vega risk away. And the way I do that is I come in here and I'm just going to add a single 760, 780 vertical. I didn't go back to 750 because there was no value in going from 750 to 760. So, why take on the extra risk? I come in here and put this 760, 780 call vertical in, and it doesn't quite fix my vega, but it puts it pretty much to flat, which is all I really wanted to do. It puts my delta positive. And as I said, my market opinion is, hey, we're coming up into this range here, and then we're going to be back down here again. So I don't know that I want to be positive delta here. I'd still rather be a little bit negative delta. So what I did is I cut down on my calls a little bit, and that brought my vega slightly negative, which I really like. It kicked up my theta some, and everything looks good. So now I'm really happy. All I really need at this point, let me put this to the current date. Right, flat vega, positive theta, positions down, less than $100 a contract. So I'm perfectly happy with this. It looks good. We'll see what happens during the week. We will just continue to manage this. But other than getting beat up on entry, all is good. All right, let's just take a look at the July M3 trade that I closed. Here's the July M3 trade that we closed earlier in the week. Had we still been in this thing, let's see, the market went down to 778, perfectly fine. Market shot back up. This would have been a good month to hold on a little bit longer, right? So, not necessarily. We never know what's going to happen, but the way that it worked out. And I'm not saying I should have held on to it longer. I'm just saying the way that it worked out, we could have easily hit and exceeded our profit targets this month, and we could have really made a bonus shot out of this. As it turned out, we decided to pull out of this position on Wednesday when the market was at, let's see, that's Friday, that's Thursday, that's Wednesday. We were at about 795, which is right up in here. We were near the middle of the graph. We were at about half profit target. We're pulling close to expiration week. I kind of wanted to get into the next month. I decided to just pull the trade and take it off. So this is one of those cases that we would have been better off hanging in. Am I upset about that? Not in the smallest amount. We make our decisions based on what I think. I made my decisions based on what I thought my risk was with what the market might be doing. And since the market had been channeling for a while, and my tent is more narrow than normal because we had a bit of a tough time. The trade worked out perfectly fine. and even if the market kept running, it wasn't a problem. But we did have quite a bit of market movement in the Russell closer to expiration, the week of the 4th. And your choice is: do you want to sit here and fight it into expiration if it decides to take off, or do you want to take your money and move on? My choice happened to be to take my money and move on. So that was great. We closed out of this thing at about our profit target was initially 3,500. We cut down to 6 butterflies, which cut our profit to 3,000. I ended up pulling it at, I think, around $2,000. We had a lot of commissions in here. Ended up making around 1,750, which is about half of our original profit target. Perfectly happy with that. So that was that trade for July. And the last trade we have on is going to be our August bearish butterfly, which is right here. If you remember, during that big up run up to about 820, we were sucking wind a little bit here, about 2/3 maximum loss. But realistically, that is like the perfect thing that you want to do. I mean, you want to come in, you want to be able to scale in, and then most of the time the market backs into your range, and you're doing pretty well. Now, as of right now, the position looks fine, and because we got that bit of a reprieve in the market, even if it decides to take off past 820 and start to push this 850 level, I believe that we should be able to stay with it. Market speed will have a little bit to do with it and timing, but that's certainly possible. We may be able to do that. In the event the market does what we think it's going to do and push, into this level up in here, and then back down, we're going to be looking really, really great for the month. It should easily hit the lower profit target. I don't know how many days we are from expiration here. Looks like we're 33 from expiration, so yeah, another 10 days or so in this thing. If the market's anywhere in this range here, we should easily at least hit our lower profit target. I wouldn't be surprised if we hit the high one this month. Of course, if the market takes off, we'll be in for the fight. So, and we will put up a good fight as well. Okay, so that is the positions. I think I gave you and I gave you my opinion on the markets. Take a look at the links for the M3 and bearish butterfly. I will keep you updated when they changes, and have a great week trading, everybody. Good night.